Peter Lynch, by some, have been argued to be one of the greatest investors of all time, having an average return of 29.2% through his Magellan Fund that he ran for over 13 years for Fidelity. Now, Peter Lynch, I really, really like how he thinks and his approach to investing as a whole. One thing that he's very famous for coining is diversification, which is do not diversify simply to be diversifying. So don't just buy 20 different holdings just to be diversifying your portfolio if you don't know nothing about the portfolio, nothing about the holdings. He liked to invest in the things that he knew, that he understood the ins and outs of. And I feel like that's a very important rule. Invest in what you know. Right there's a diversification. Invest in what you know and what you understand, and learn how to do the proper research to see the company and how it's going to be doing and performing in the future. And he also review holdings every few months, rechecking the story. He referred to companies as stories, and make sure that they're still playing out as expected, and sell if something major has changed or if things just aren't working out. Price drops should usually be viewed as an opportunity to buy more at a cheaper price. I feel like this is another big thing that a lot of newer investors don't do. They see red, they think it's dead, and then they just sell it, and they might have missed out on a great future opportunity when it comes to a good holding. I look at red days as, things are on sale. When I go to Walmart or something and I see the red sale price tag, I don't go, whoa, no, I don't want that, it's cheaper. And try to look at stocks that way as well. If I see things are on sale, I try to load up on the things that are down if they are strong and have a good future forecast ahead of it. Consider rotating, selling played out stocks with similar stories but better prospects. The thing that he coined with this one is, he said if stock number 2 has a good story but went down, stock number 3 has a good story but is even, stock 7 has a good story but it ran up 50%. He said that there's nothing wrong in selling 7 to put more money into 2. And that's one thing that I try to do, is if something runs up real quickly, and even if I like how it looks, if it's over, if it's been overbought and I feel like it's a great opportunity to take some profits and maybe move that money into something else that I might be able to get more out of, I don't mind doing that. I rotate around quite a bit. And I don't know. I feel like that's working for me. I've been doing pretty well. But yeah, Peter Lynch, he does have a value calculator. Apparently this was his fair value formula. Earnings growth plus dividend yield divided by PE. And I'll have a link to all this, everything, in the description down below, so you can check it out for yourselves. And I was just going to show you very quickly how to use the Peter Lynch value calculator. Nothing in this video is for financial advice or anything. I'm not telling you to buy this or buy that or to do this. I was just letting you know if this is something that you can do, you might want to check it out. But yeah, Peter Lynch value calculator. So you can go to Zacks.com, and you can just type in any holding into the little search bar there, and it'll bring you up this page. So today, just for the purpose of this example, I'm going to look up John Deere. So we're going to look at the EPS growth rate, and Zacks has that at 12.85%. So we will type that in there, 12.85%. As a dividend yield, I like to Google this because it's more of like an up-to-date thing. So if you Google the stock, you can get the current dividend yield and PE ratio. So dividend yield's 1.22%. So we're going to type that in there, 1.22%. And the PE ratio is set to 13.74. So 13.74. And according to the Peter Lynch value ratio calculator, this is considered a fairly valued stock. Now, as you're tinkering around with this and playing around with it more, there is a little key down here. If it's less than 1, the stock is overvalued. If it's equal to 1, it's fair valued. Equal to 2, undervalued. And more than 3, it is very undervalued. So yeah, this might be something you just want to tinker around with, play around with. I've been watching some Peter Lynch videos here as of late, and I'm just trying to get the most bang out of my buck, and I'm trying to make sure that I take advantage of the run ups and the run downs the best that I can. But yeah, I hope you enjoyed this quick little video. Look at Peter Lynch, how he does things, and yeah, I like the guy. Maybe it's something you want to check out. Like I said, description below is going to have all the links to everything. And if you're new, make sure to hit that like and subscribe button for more. I greatly appreciate it. And until next time, see yins.